Welcome to today's What Will Move the Market show. I'm your host Prem. It's Tuesday, November 18, 2025, and here is everything you need to know as the markets open for today. Let's start with what happened on Wall Street overnight. It was a mixed session with the major indices showing some weakness. The S&P 500 fell 0.9%, closing at 6685, while the Nasdaq slipped 0.8% to 22,908. The Dow Jones came under more pressure, declining 1.2%. The headline here is that investors are increasingly cautious after the recent tech-led rally, with Nvidia becoming the biggest drag again, slipping 1.8%. We did see some bright spots though, with Alphabet gaining over 3% on strong fundamentals. The overall sentiment remains uncertain as markets await key US jobs data expected later this week. The longer-term theme continues to be rotation out of mega-cap AI stocks into other sectors, as investors question the sustainability of AI valuations. Moving to Indian ADRs overnight, let's check on the key Indian companies listed in the US. Infosys ADR moved up 0.72%, showing positive sentiment in the IT sector. HDFC Bank ADR gained more meaningfully, up 1.08%. ICICI Bank ADR was slightly negative. Reliance GDR has gained 1.03%. The banking ADRs continue to attract interest after recent earnings, while energy remains steady. For Indian investors, this suggests foreign money is selectively viewing India's large-cap financials and energy as attractive, despite the broader tech weakness globally. Now looking at early morning Asian activity and GIFT Nifty, the Asian markets showed mixed performance overnight. Japan's Nikkei has declined 1.9% and is below 50,000, facing headwinds from disappointing Q3 GDP data, which contracted at 1.8% annualized. Hong Kong's Seng has fallen close to 1%, pressured by China-Japan geopolitical tensions. Shanghai Composite slid 0.5% to 3,972, reflecting cautious sentiment in Chinese equities. Coming to GIFT Nifty, it's trading below 26,000, suggesting a mild negative opening for the Indian markets. This is just slightly lower than where Nifty closed on Monday at 26,013, indicating sentiment is flat to negative heading into today's trading. On the global developments front, there are a few things worth noting for India. The Trump administration continues to weigh heavy on trade sentiment, with recent proposals to impose tariffs of up to 500% on countries trading with Russia. India is already facing 50% tariffs on key exports like textiles, gems, and jewelry, with an additional 25% penalty specifically for purchasing Russian crude. While trade negotiations continue between India and the US, the uncertainty remains elevated. Additionally, we're seeing geopolitical tensions rise in the Asia-Pacific region, with China-Japan frictions impacting market sentiment broadly. For Indian investors, the key takeaway is that any escalation in trade barriers could impact India's export-dependent sectors, particularly IT and manufacturing companies. Back home in India, today is shaping up as an important market day. The PhysicsWallah IPO is listing today on both the BSE and NSE after being subscribed over 1.8 times. This edtech unicorn has generated decent interest, and the listing could add momentum to the mid-cap space, particularly in the technology and education sectors. FII flows remain a concern, with foreign investors having sold over 139,000 crore rupees in November alone, as capital rotates toward US and China markets, where AI plays are concentrated. However, the RBI continues to support the rupee through its forex operations, and domestic institutional investors have been buying on the dips. Watch for any fresh developments in US-India trade negotiations, as these could provide fresh cues for market direction. From a technical perspective, the Nifty 50 closed above the 26,000 level yesterday and is now facing immediate resistance at 26,100, followed by 26,150. A sustained close above 26,050 today would strengthen the bullish momentum further, potentially opening doors toward 26,300. On the downside, support has shifted higher to the 25,800 to 25,900 zone. The Bank Nifty hit a fresh all-time high, near 58,957 yesterday, and is trading with strong bullish momentum. Immediate resistance for Bank Nifty lies around 59,300 to 59,500, with the key support zone at 58,000 to 58,200 levels. Overall, both indices are in strong uptrends with positive momentum, though staying above the 20-day moving averages is crucial to maintaining the narrative. On the commodity front, crude oil prices continue to weigh on energy markets. Brent crude closed at $63.85 per barrel, down 0.83%, as OPEC signals an oversupplied market, and the International Energy Agency prepares fresh production data. With geopolitical tensions in the Middle East, volatility is expected to persist, but downside pressure remains from concerns of a supply glut. Looking at precious metals in dollar terms, gold closed just above $4,000 per troy ounce at $4,011, down 1.77% from the previous day. Silver tracked lower as well, settling around $49.77 per ounce, showing weakness from the previous session. The rally in gold from the festive season has corrected, though geopolitical tensions are supporting prices near these levels. These commodity moves have modest implications for the Indian market, though rising crude prices do support energy stocks, while higher gold prices benefit jewelry exporters. Here's the actionable theme for today's trading session. With global growth concerns building and AI valuations under pressure internationally, India's domestic fundamentals remain relatively stable with supportive central bank stance and decent earnings from banking and auto sectors. Traders should look to accumulate on any mild dips in the Nifty around the 25,900 level, as this represents strong technical support with limited downside risk over the near term. However, watch for headline risks around Trump tariff announcements or any sharp move in crude oil prices, as these could trigger volatility. The PhysicsWallah listing today could provide trading opportunities in the mid-cap and tech space, so stay alert for any sectoral momentum shifts as the day progresses. Stay tuned for the evening wrap and send in your questions. Subscribe to this podcast to hear US every day for the latest market insights and trading setups.